Welcome to Markets Now. I'm Michelle Rick along with Randy Martinson Ag. Well, we are seeing some mixed trade over in the grains this morning. We've got corn and wheat higher, soybeans lower. Cattle, we're to the plus side there with hogs lower. And so a mixed session over there as well to start. And Randy, I want to start off with the corn market. We're back up today. We're starting a new quarter, but how much of Friday's activity down was just because of the government shutdown? And now that we're not getting the government shutdown, are we getting a little relief rally or what's going on?
Yeah, I think so. I mean, looked at the numbers for corn and they were friendly. We lowered the harvested acres. We also had smaller stocks than anticipated. So the corn numbers actually turned out to be a little better than what we were looking for. And, we've had some trouble getting the crop harvested. Yields have been very variable all the way across the corn belt up here and even into the northern plains. So I do think that, corn kind of has taken a little bit bigger hit than it needed to. And we're starting to see maybe a little bit of a technical bounce. And I think some of the support, is spilling over from a stronger wheat market as well.
No doubt. We'll get to talk about wheat in a moment here. So again, like you said, we bounced off support. We also had a little export business to Mexico here, and exports actually are looking a little bit better compared to last year now, aren't they?
They are. I mean, even Friday we had a large export sale to Mexico, and then now again overnight we did see another sale come into Mexico for corn. So the private buyers are out looking for U.S. product, no matter what the press is saying, about Mexico not wanting U.S. corn. The private crushers or the feed users are looking for U.S. corn, and they've been buying aggressively over the last couple of days, mainly because of the price drop.
Absolutely. We've gotten down to a value level, obviously. As you said, though, corn getting some help from the wheat market. We scored new contract lows in wheat on Friday and Chicago wheat, anyways, and I think new lows for the move in the other two classes. Let's talk a little bit about the reason we were down Friday, and then we'll talk about why we're up today. Friday, it was really that small grain summary that tanked that market, wasn't it?
It was. I mean, the stocks number didn't turn out to be too bad. That was close to expectations, but the production numbers, the small grain summary that kind of summed up the year's production for wheat was a little bit daunting. It wasn't so bad for the winter wheat side of things. It was really bearish on the spring wheat things. The other spring wheat production up quite a bit. And that, was expected by, us up here in the Northern Plains as, we kept hearing better than expected yields. That came into play. I think North Dakota was up close to 8%. South Dakota and Minnesota saw much larger increases.
Yeah. The funds are short here, though, in all three classes. And so, like I said, with us hitting some contract lows, at least in Chicago on Friday, is this just a technical bounce?
Yeah, as of now, that's all we can call it. I mean, wheat has really been struggling, and we can still, because of the stronger dollar, we are still not competitive in the world market on the export side of things. We need to get demand built up for wheat for this market to be able to see too much of a rally. So right now, I'd have to say it's just a dead cat bounce, short covering, just to clean the market up and maybe give the incentive for some more sales to come in. But I hope it's a bottom kind of being found in this market.
Yeah. Soybeans are lower again this morning. More harvest pressure, you think?
It's more harvest pressure in the U.S. right now. We got a forecast that's calling for a warm and dry. That certainly is going to keep the combines rolling. But there's also rain in the forecast for Brazil. I think that's adding a little bit of pressure on this. It's for the 6 to 10. They've been extremely warm. Planting's a little bit behind where they'd like to be at. They started early because of the better conditions, but they haven't seen a lot of crop get planted yet.
Yeah. And some of the pressure last week, I mean, we had a export sale, I think almost 5 million bushels of soybeans to China this morning, but our year-to-date exports so far for this marketing year are falling behind. Is that also a headwind here?
It is. I mean, we're over 35% behind last year's pace. And so, yeah, we've got some room to grow, or we've got some room to make up there as far as the exports for soybeans are concerned. What's really interesting, though, is that with this drop, we did see China come in and buy. China's on holiday this week. So for them to come in and announce this purchase, that is a little bit friendly to the market.
Yeah, hopefully we'll trade higher at some point during the day, especially if corn and wheat keep going here. Soybeans, I got to ask you though, technically, we took out the August lows on Friday and we made new lows for the move here again overnight. Do we have a support area that we're going to be able to bounce off of here or that we're holding at this point?
We do. I mean, I think, I think this market's going to go down and try to test that 1235, 1225 area, somewhere in that region. And I think that's kind of what we're destined to kind of see this market get down to, depending on where the yields come in and how harvest goes. But that, I think this market's looking to test those levels.
You bet. Cattle market, a little bit of a relief rally, you think, here with the government shutdown actually in the rearview mirror now?
I think so. We bought ourselves only 45 days, but it means a lot to the cattle market and to demand. It means that, with the government continuing to operate, we're going to still continue to see money flow. And that, I think, is certainly helping. And the fact that the uncertainty is out of the market. I do think that that the cattle are going to continue to watch what the Fed does here in the next Federal Reserve meeting. I would bet that we're going to see an interest rate hike, but the other 45 days, once we see whether this government can keep rolling. But right now, I look for this market to go back and try to test the old highs.
Okay, so you think this was a healthy correction in a bigger bull market?
I do, and I still think we're going to see a pretty good sell-off yet this spring, I think, or this fall. Once we start seeing the calves hit, I think a lot of producers are going to look at the price that they're getting, and there's going to be a lot of calves that come to the sale barn, whether it be steers or whether it be heifers. It isn't going to matter. They're looking at some of the highest prices they've ever been able to sell cattle at, and I think a lot of them are going to come to the sale barn and move through and get it put into the feedlot, and that, I think, will pressure things, but that will open up for, I think, a pretty good rally once we get past the first of the year.
You bet. And we do have the dollar you mentioned earlier has been strengthening. And, where do you see us going here? Because I think we've gotten up into 10 and a half month highs now in that dollar.
Yeah, we have. I mean, it seems to be rolling pretty good. And I look for it to continue to push until we get a little bit more stability as far as the economy is concerned. So I don't think the rally's done until we get closer to the end of the year.
So you mentioned the uncertainty of the government shutdown impacting the cattle market, but all the markets kind of reacted to it on Friday. So now that we at least have averted it for the time being, do you expect all these markets to maybe act a little bit better here this week?
I do. You're right. I mean, that's a really good point. I think every single market was down on Friday, mainly because of the uncertainty that was coming into play. So now we've kind of relaxed that a little bit. I do think that we'll start to see a little bit of a recovery in most of the markets.
All right, we'll watch for that. Thanks for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.